Wow, what a day. If you were watching the market today, you saw an absolute bloodbath. Nifty didn't just fall, it completely collapsed. So let's break down exactly what happened and, way more importantly, what we're going to do about it now.
A 500-point drop, that feels like an earthquake, doesn't it? It for sure caught a lot of traders completely off guard. But if you were with us yesterday and had our analysis, the shock wasn't the fall itself, it was just how perfectly it followed the script.
I think for a lot of people, days like today are a real wake-up call. They're a stark reminder of what the market really is. It's not just random chaos. It moves based on predictable levels. So what we saw today, it wasn't a surprise. It was simply the market doing exactly what we expected it to do.
So, the big question is, how did we see this coming? Was it just a lucky guess? Not a chance. Let's actually pull up yesterday's prediction and put it side by side with today's reality. The numbers, well, they really do speak for themselves.
Okay, check this out. This is where the magic happened. Our predicted ceiling was 25,880. And where did the market hit its high point today before it all came crashing down? 25,885, a 5-point difference. That is not a coincidence, my friends. That is a hard rejection at a critical level we had marked out.
And as soon as that reversal started, man, the dominoes just fell, one after another, exactly as planned. Our first target, nailed it. The second, smashed right through it. The third, gone. Each level broke and triggered the next leg down, all the way to that staggering low of 25,388. This right here is the power of having a clear, level-by-level plan.
Now, if you're new to this, you might be sitting there wondering, okay, how is this possible? Are you guys using your crystal ball over there? It's not magic, I promise. It all comes down to a really fundamental and actually pretty simple concept. Let's break it down. So we call this a resistance level, and the easiest way to think about it is like a ceiling. It's a price point where there are just so many sellers waiting that they completely overwhelm the buyers. The price goes up, hits that ceiling, and bam! The weight of all those sellers sends it falling right back down. Today, that ceiling was at 25,885.
And of course, the opposite of the ceiling is the floor. We call that support. It's a level where we expect buyers to step in and push the price back up, just like a ball bouncing off a solid floor. We had several of these potential floors on the way down today, but as we saw, they just couldn't hold.
So what happens when the ball doesn't just bounce off the floor, but smashes right through it? Well, it falls into the basement. And that is a perfect description of what we saw today. The market crashed through one support level after another. It was a total freefall. That massive 500-point drop, that was the sound of the market falling deep into the basement.
All right. Enough about today. What happened, happened. The most crucial thing now is what we do next. The market's in the basement, so let's get right to our action plan for tomorrow, February 20th, and figure out how we're going to navigate this new territory.
First things first, and this is absolutely critical, we have to identify the trap. For tomorrow, that trap lies between 25,440 and 25,480. This 40-point area is a no-trade zone. Inside this range, the market is going to be choppy and deceptive. The smartest move you can make here is to do nothing. Just watch. Wait for a clear signal out of this zone.
So here it is, the core of tomorrow's strategy, and it's all built around that no trade zone. We've got plan A, the bullish plan, and plan B, the bearish one. It's simple. If the market breaks above that zone at 25,480, we're on plan A. We buy calls. If it breaks below the zone at 25,440, well, the bear hunt continues and we're on plan B. We buy puts. And notice how clean this is. The stop loss for each plan is just the other side of that zone. It gives us a crystal clear decision point. All the specific target levels are right there on your screen now. Now, I know, seeing those big mega targets can get the heart racing. But a plan is totally useless without the right mindset to actually follow it. And that brings me to the final and honestly the most important piece of advice I can give you. Discipline. Please don't get greedy trying to catch that one final massive target. As the market moves in your favor, book your profits, take small gains along the way, or use a trailing stop loss to protect what you've already made. Remember, the goal isn't to be a hero and catch the entire move. The goal is just to end the day profitable. So that's the setup for tomorrow's open. The question is, will the bulls finally charge out of the basement, or is the bear hunt going to continue?
We have our plan, we have our levels. Now all we have to do is trade with discipline. That's all for this market breakdown. Trade smart, and I'll see you next time.
இந்த வீடியோ உங்களுக்கு பிடிச்சிருந்ததுன்னா லைக் பண்ணுங்க, ஷேர் பண்ணுங்க, சப்ஸ்கிரைப் பண்ணுங்க. Thank you for watching.